Looked at the biggest 15 US and Canadian banks, and then also the biggest 15 European. And the split basically simplifies down to it's about 3 days a week in Europe compared to 4 days a week in the US. And of course in the US there's a lot of very notable examples who are back fully to 5 days, right? The JP Morgans, the Goldmans. So I think it's been a really interesting split. And like you say, it's kind of part and parcel of this divergence really between particularly the US banks and Europe, in that, one of the theories going out, there's lots of reasons why this is happening, but certainly one analyst was saying, one element is the fact US banks are just that much more profitable, and thus they sort of have almost like a little bit more leverage over their employees to effectively go, no, it's going to be our way or the highway, is what Mike Mayo told us. But yeah, as you say, it's one of those stories where, I think anecdotally that was the kind of clearly the sense, but it was quite startling to see it kind of, when you really dive into the data, go, oh yes, it's really basically almost two different strategies, with, broadly speaking, the Europeans kind of viewing it as almost like employee retention tool, and US banks going, we don't care, we think the most efficient way to work is in the office, you're coming back in.
Well, you're kind of leading to what I wanted to ask, Tom. Is this a cultural thing? Is this also playing a factor?
Yeah, and there's obviously no one size fits all, right? But like broadly speaking, there's a little bit more of that, get-go attitude, etc. I'd say a Goldman, whereas the European banks, structurally, there's more retail banks in that space, or certainly the investment banks, the capital markets is a bit smaller part of their business. So there's certainly a bunch of different things flowing through here. And, well, the other interesting thing was the academic research we took a look at the same time is not out there going, if you bring everyone back to the office, you necessarily get better stock market performance or even better financial performance. So it's very much, I think, cultural is probably what's driving this, the tone from the top. Someone like a Jamie Dimon, probably the most outspoken executive on this, very, very keen to have everyone back in the office. And then on the flip side, Bill Winters here, who runs Standard Chartered, he's literally taking the opposite tone. So he's just effectively going, look, we believe our employees can make the right decision for their particular teams, and Standard Chartered is a fascinating example of everyone we spoke to. They basically said they don't even have a specific mandate at all. They just truly are sort of decentralizing this and just telling people that there's no policy, just make sure you do what's right for you.
Wow, that's interesting. And I wonder, I'm hearing stories that, back to work schedules and requirements may be used as a recruiting tool to attract and retain talent, i.e., Citigroup, I know Jane Fraser, the CEO there, she thinks it's a recruiting tool for Citi because they're only at 3-day mandate. Are other banks thinking that way?
Yeah, exactly. It goes to show, it's not like kind of a universal monolith here. Like, you go through the US banks and there's a bunch of variety, and Citi's probably maybe the most interesting example, because as you say, it's got that, it's going through a big restructuring, and as part of that, it's offering a bit of flexibility to its employees. Some people think because, that helps retain talent who might otherwise, look further afield, but they can go, well, look, if I'm at Citi, I get way more flexibility, it fits my lifestyle, or it gives me that ability to work from most places. So it's really fascinating, and I think you kind of almost have to go case by case, but broadly speaking, still, if you're looking at a US bank, you can expect a little bit more strictness around RTO.